Signs of distribution in the markets and decent falls are afoot. What do they mean for the Australian and US markets? That's a question we're asking Gary Glover, along with extending that out to the market heavyweights of financials in the Australian market and then trading charts for the shares this week. Good morning, Gary. How are you?
Yeah, I'm excellent, Chris. How you going?
Well, we've got markets falling. You've said for some time that there's a fair bit of pressure coming onto the Aussie and US markets, and we'll have a look at those. Before we jump into those, just quickly update us what's going on in your portfolio. What are you holding? What are the stops? What are you looking at? What's happening?
Yeah, no, I'm still pretty light on there. So I think 34% invested. I think 12 of that is in sort of short posies. Ideally, I'd like to be a bit heavier short there. But yeah, still got a few defences on. A few of those stops I've just sort of taken away just to give myself a bit more room, but just only because I'm sort of pretty light on here. So, but yeah, I think just got to be pretty cautious here now. Sort of trying not to take any sort of too many longs on there. They've got to be sort of defensive or just the right type of trade here. Got to be very particular here now. I think the risk is sort of hitting. I think we're in the calm before the storm here, so we're very close here. Look, there might be one little last. I'm hoping there's one little last leg up here, maybe up into the early August, but it doesn't always go perfectly to plan. Sometimes they can break down here, so we just got some moves here, some levels there to sort of keep an eye on there. If they break below there, then we should be concerned here. But we're very close to the end here of this move here, and I think there's a big move coming to the downside. I don't think most people will comprehend how big a move we're going to have. But yeah, we just know that these sort of vertical blow-off trends, they just don't end well. So once this finishes doing what it's doing, the correction is going to be pretty nasty. So we should just be sort of trying to tuck away a bit of cash and maybe put a few little hedges in place as well.
Well, you've got some selective longs to look at that we'll have a look at a bit later, but you've mentioned here that it's quite a drop that could be ahead. So if we start off with the S&P 500 chart, so it's kind of hard to really fathom how much it could fall. What does the chart indicate on this S&P 500 that you've got this sort of red ascending wedge? What is that pointing us towards?
Yeah, so just looking at this sort of sort of upward sort of diagonal sort of ascending wedge there. We've just had a lot of touches there, so we've sort of got sort of 3 or 4 touches on each side there. So the more touches we've sort of got, the more more valid the sort of pattern is there. And I know probability, if you look at Bolkowski and stuff there about different sort of patterns there, it's probably not one of the highest probability patterns there, can sort of fail there. But when you sort of the good ones, particularly when they last a bit longer in length and they have multiple touches, as well, they're a lot more important there. And a market that's pretty vertical like this, if we start breaking below here, then other market participants will start to get scared as well here. So but yeah, so really just a break below that channel will be pretty negative there, and that'll be just below the previous swing high. So if you think about a trend, like if we look at the S&P last night, it actually pulled down pretty hard, but it actually closed on top of the previous high. So in terms of holding itself in a really important position, where it closed there last night was really important for the S&P 500. So if it closes below that level, then I'd be pretty concerned here, because if this has still got a bit further to go, it should sort of hold on top of the previous high and then go higher. If it breaks below that previous high, that's pretty bearish. If it breaks below that ascending trend line, that's pretty bearish as well. So we're going to have sort of 2 negatives there. So yeah, just got to be just an important level here. So look, might hang on. I'm hoping it does hang on and pushes slightly higher, but we're really late in the cycle here, so just got to be pretty cautious here.
So if we move on to the NASDAQ and have a look, that one's even, well, we've talked about this many times for vertical trends. You've got screwing off. Yeah. What's the latest on this NASDAQ scary chart?
Oh, it's going to be one of the scariest charts we've seen here. I mean, it's putting the 2000 trend, makes that look small. If we look at we highlighted the Nikkei and the Shanghai, which have had massive moves as well into their blow-off tops before they had those massive falls. This is equally, if not sort of bigger than those moves here. So got our 3 ascending trend lines. The last move up here is it was pretty vertical there. We're sort of, we've more than doubled here in the last 15, 16 months here. So incredible sort of rally after what's a 10, 11 year sort of bull market already. So this is phenomenal. But we know that once they break, they always come back to the come back to where the third ascending trend line started. That's pretty deep here. But even if we just come back to the old high, which is sort of what a normal trend would do, that's a fair correction there. So that'll be coming back to 10,000. So if we're able to say get to 15,000 and then come back to 10,000 there, it's a pretty decent drop there. So if it comes back further than that, back to sort of 7.5, whereas I think it might ultimately come back to, then that'll be a massive move as well. So just got to be cautious here. I mean, these vertical trends are just, history just shows us that they don't end well. So look, I might be wrong. It could be different this time. But history has just given us a guide there that these type of moves in equities, they don't end well. And we've seen from the past there that that it's happened within this index already, which is a good marker, because the other markets that have had these vertical trends have repeated the sort of same patterns as well. So it's not uncommon to repeat it in the same index here. So we know the NASDAQ's had a pretty nasty correction in the past when it got overheated. So we know it can happen again. So just got to be cautious there. I would love to see this get to 15,000 first here, Chris. That'd be when I looked at all the squarings there, that would be a better squaring, better fit from a technical point of view. So hang on slightly longer here, but it doesn't always set up perfectly. So just got to be cautious here.
So we're learning from history. We're seeing that NASDAQ has had these sort of massive runs up and falls.
Yep.
If we're talking about history and we go to the oldest indices, we've got the Dow, which sort of seemed to be left behind in the last couple of weeks and months while the S&P and NASDAQ kept going to new highs. What's the Dow saying to you at the moment?
Yeah, it's interesting, isn't it? So the old index, which is historically been one of the safer ones, probably had the mildest corrections there. It's underperforming here as well. So really that the NASDAQ's the one that I think is the one that's vulnerable here. Yet so far the Dow's the one that's probably been the weakest, and it probably had the largest fall there last night as well. So interesting there. I still sort of see this as had a little sort of three-way pullback here, although it's broken that trend line, which is a bit bearish, and then gone back up to retest it there, which is kind of normal. Just normally after a little sort of sideways shimmy like that, I would normally expect to see a new high. So I know we got within a few points. So I got people might argue we're close enough, but just historically, I like to see a new high there first. So the question is here, we've broken through the bottom of that sort of that wedge there after breaking out, which is not uncommon there. We've shown in the past here, once they break out, that's how they finish, and then once they come back in, they tend to break the other way. So the question is here, is this the start of the move down, or are we going to get a slight new high first before the move down? So either way, we're pretty close here. It's not going to go too much higher in my opinion. So yeah.
Let's they're the US markets, and then you've put in this week's report an amazing chart for the XJO. So the ASX top 200, the S&P 200. This shows that we've had a phenomenal number of just monthly gains, just consistently going up and up and up. So what's that staggering climb telling us in the Australian market?
Yeah, so I was just trying to look through some of my older sort of more wide frame charts there, and just trying to find. I look at a lot of ranges and stuff there to sort of see, what the one thing sort of Gans sort of says. Oftentimes might be a particular range in the past which is more important than in other ranges, and then the market will just tend to sort of will find sort of geometric sort of levels from that range. So when I looked at previous high to lows, all sorts of stuff. This was a range that really stood out as having the most resolution there in terms of in the last probably 5 or 6 years. So that was sort of looking from that 09 low up to the 10 high. So it was a decent bounce off that, after the GFC low. But if we square that range out there, that was sort of everything is projected pretty nicely off that level. So just showing some pretty strong resistance here around that 7,400 there. And we've noted here in recent weeks there that the volumes have been up. So we sort of initially was sort of big volume at the low. We've run up, volumes are sort of weakened off. But then as we've sort of gotten to this around the 7,400 level, the volumes have picked up again. And when you see volume pick up, the question is it accumulation or is it distribution? And if you've run pretty hard and you're pretty vertical and you start to see volume there, then that can often be signs of distribution. So seen in the banks have sort of come off here, and there's been some reasonable volume there. You just often see sort of volume come in, some profit taking at the peaks there. So that's the one thing we've got to be wary of. And I've just definitely the last month or so here, we've seen a pickup in the volume there, which could be a sign of distribution there. And I sort of, we talked about the first year cycles there. A lot of September, October lows there. So particularly late September lows sort of in the cycle. So just kind of wary of a pullback into that time as well here. So just getting a few little signs there, just to be wary here. And our ranges are telling us that's probably a pretty important level, just up above 7,400.
Okay, so that's where we are. And as you mentioned with the US, that could be sort of the leading indicator that tips the scales. When we're looking at falling markets, a lot of people run towards the gold stocks. You've got a gold stock in here that you've had a couple of times before. Looks like you're adding this to the portfolio, or where's that up to?
Yeah, so we added it last week. So as per our report last week, and so we've had a bit of a bounce there. So I think I've edged up my stock a little tighter. One thing I've noticed with gold in the past is people have that sort of misconception that the markets sort of go down, gold will go up. That's not always the case. And there's actually been cases in the past where the market has gone down and actually gold has gone up, and yet the gold stocks go down. So if the market starts getting scary and starts getting nasty corrections there, you'll find that the gold stocks will follow the market rather than the commodity. So might initially go with the gold move, but stocks will follow the stock market down. People eventually they'll just start going for the portfolio and selling everything. So
they get tarred with the same brush and they go out.
So look, I just got to have don't get locked into a view that this is definitely going to happen this way and the rest of it. So, I think some of the gold stocks we highlighted them last week. Some of them look pretty good here, but I'm just looking at this one here. Look, there's pretty good volume down here, some accumulation here. I think there's some good reason as to why this can bounce from here. And we've shown sort of signs of breaking out there. There's a bit of a cap at 270. That's where the raising was done. So it might take a little bit to get through that level, but I think breaking through 270 will be really important.
Okay, well, then we move on to another one that's seemingly defensive, but it's a bit odd with interest rates this low. IAG, Australia Group, they are known as the company that owns NRMA. That's been churning sideways. I know you've mentioned this one before. Are we seeing some positive movements within this sideways bottom churning situation?
Yeah, we hope so there. We just, I'll sort of had to trim. Because I've sort of tightened up some of my stops, some of my positions there. I got sort of stopped out on a few of them at a small gain there. But I've recently put a small position on again. But again, I've got a sort of tight stop here. So we've got our false break low. And since then, we've sort of got 1, 2, 3 high lows. So still looks pretty constructive there. That volume last week was pretty interesting. So is that accumulation taking place? So we kind of want to, this week will be really important. You want to sort of see, some, price not really break that low there from last week personally. I want to sort of see it sort of hold up here. So I think we've gone actually marginally lower here today and recovered there, but that's probably not what I really want to see actually. I think it should be sort of, if this is sort of basing there, it shouldn't break a swing low there. So it'll probably leave me out of here and sit back and watch it here. But look, I do think ultimately that inflation could move on here, and that'll be good for these sort of IAG and the QBEs and stuff there. But we've seen bond yields pull back again, but they've probably come back to where as low as they'll come back, and they'll probably go back up again. So but definitely stocks to see, but keep an eye on there. I think there's some value there, and I think some technical signs are okay there as well.
And we move to some banks, because you mentioned that the banks, some of them been on the nose. It's not looking so great for the index. They do make up a huge part of the Australian index. And a couple of weeks ago, you'd mentioned that they'd be coming into some overhead resistance. Is that what we've got here with Westpac? Is that on the chart?
Yeah, look, CommBank was trading on 22 times earnings there, which I think, I've been in the market for 20, 25 years now. I've never seen it trade on that multiple before. So, people can give me any excuse as to why it is there. But historically, it's just never traded there. I know interest rates are probably as low as they've been for quite some time there, but the earnings aren't as high as they've been for quite some time. So for mine here, they're pretty expensive across the whole sector. I think Westpac might have been 20, 21 times as well, which historically, there's been times if you've bought these under 10. So it's a pretty high multiple. So look, on the technical picture here, we talked about these three ascending trend lines again, and we talked about the 50% level. We've still got this overhead trend line as well. So the reality is here, the Westpac still hasn't, it's still in a downtrend since 2015. I'm not sure most people probably aren't aware of that. And although this rally is pretty good, it's bigger than the previous ones. That's a positive sign, but still in a larger decline here. So, I think that's a probably good low that is in 2020. But this is a pretty good move as well. So I think the target for me is to come back to that third ascending trend line, which is around that sort of 1920 level. So this has had a pretty hot run. Definitely been some good volume coming in off that high at that sort of around that 50% of the range level as well. So, I think there's some good reasons as to why this can come off here.
Well, that's Westpac. If you go to the regional ones, we've also know Bank of Queensland is sometimes a better trading share depending on the movement you're after.
Yeah.
Is that indicating a similar sort of break as well?
Yeah, so we've sort of got that sort of kind of, I guess, like a rising wedge sort of pattern here. But the thing I like more about actually is that we've sort of got a spike high, and then we've been trading against this spike high, and now we've essentially rolled over. So we've had a long time to actually go above that high and haven't. So it's kind of a theory sort of called trading against the spike, So and it hasn't been able to do that. So it's basically got corrective there, and then it looks like it's sort of rolling over here. So that's quite bearish as well. So so that looks pretty negative to me. But obviously we've had follow through since then. So paints a pretty bearish picture for a lot of these stocks here. So I think the volume's pretty decent, which is showing signs of selling here. Multiples historically pretty high as well. So again, there's good reasons as to why they didn't come off here. And if there's any questions regarding the recovery and how slow it might be and how much more free money the bank's got to give out and government's going to give out, that's if it's going to seem to be a big delay the recovery, that'd probably be negative for them as well.
And to round this out, you've got a more speculative possible buy here. You've mentioned Rhythm Biosciences. So just before you jump to the chart, do you want to just quickly say what the company does so we get a bit of context of what we're trading here? Yeah.
So for those who've already turned 50, you'll know that in terms of getting tested for the colorectal cancer, there you get sent the poo test, which is quite an obtrusive way to screen for this type of cancer there. What Rhythm Biosciences is working on there is just a simple blood test, which you can just go and get done at your GP. And so far, the recent performance studies are pretty encouraging. So the stock's had a pretty good run. It's had a pretty, gone from 10, 20 cents up to 160 recently. So a phenomenal move there, but has sort of cooled off, probably come back half of that range. So come back to around the 80 cent mark. And I see now that after their sort of positive trials here, they've now basically just set up a US sort of domain there, and which will be, you know, all under the same umbrella there. So if you think about it, there, it's second largest cause of cancer in Australia, Europe, and US. So the addressable market is pretty decent. So pretty speculative, but yeah, pretty interesting company as well. So nice and simple, pretty easy to understand. If these guys have got a pretty it's been quite some time since we've had
a breakthrough like that.
Yeah, innovation in that area there. And you're already seeing quite a few of these other sort of testing products come through, you know, in this area. So if you get this sort of right here, there's definitely some some money to be made there. So yeah, risky, super interesting, but a pretty simple company to understand as well. So I like them nice and simple. So I think this looks pretty interesting here. It's just sort of bounced off a bit of a key support level. Like to see a bit more volume come in. But yeah, encouraging signs there.
Very good. Well, there's a high risk trade, and to round that out, if people want to talk to trades, understand their portfolio, understand the markets, they can give you a call or send you an email or follow you on Twitter. Are they the ways to get in touch with Gary Glover?
That's right. Yeah, definitely interesting time here. I think if I'm right about my timing here, I think in the next 2 or 3 months, everyone's going to be ringing someone for help.
That may be good for business, but mate, not necessarily good for the investment landscape.
No, that's right. Yeah.
Oh, very good. Well, thanks for the updates, Gary, and we look forward to the next one.
Thanks, Chris.